Question 1. Legal and regulatory framework. A producer in Pennsylvania accepts a gift worth $500 from a client as a token of appreciation for issuing an insurance policy. Under Pennsylvania's Unfair Insurance Practices Act, UIPA, is this act permissible? A yes, because the gift was given voluntarily by the client. B, no, because accepting gifts over $100 is considered rebating. C, yes, as long as the producer discloses the gift to the Department of Insurance. D, no, because producers cannot accept any gifts from clients regardless of value. Answer B. Explanation. According to Pennsylvania's Unfair Insurance Practices Act, UIPA, rebating is prohibited. Rebating includes offering or accepting any valuable consideration, such as gifts or discounts, that is not explicitly stated in the insurance contract. The law specifies that any gift or incentive exceeding $100 is considered rebate and is illegal. Option is incorrect because even if the client voluntarily gives the gift, the producer must adhere to regulatory limits. Option C is incorrect because disclosure to the Department of Insurance does not make this act permissible. Option D is incorrect because producers can accept small gifts as long as they do not exceed the legal limit of $100. Question 2. Property and casualty insurance, scenario-based. Karen owns a small business in Pennsylvania that provides catering services. She recently signed a commercial general liability CGL policy to protect her business. During a wedding event, one of her employees accidentally knocks over a table, injuring a guest and causing property damage. The guest sues Karen for the injury and property damage. What part of Karen's CGL will cover these claims? A. Coverage A. Bodily injury and property damage liability. B. Coverage B. Personal and advertising injury liability. C. Coverage C. Medical payments. D. Commercial property coverage. Answer A. Explanation. In a commercial general liability CGL policy, coverage it protects against claims for bodily injury and property damage liability resulting from business operations. The guest's injury and the damage caused to property fall under this section of the policy. Option B is incorrect because coverage B deals with personal and advertising injuries, such as defamation or copyright infringement, which do not apply in this scenario. Option C is incorrect because coverage C covers medical payments for minor injuries, regardless of fault, and is limited in scope. It does not cover lawsuits for liability. Option D is incorrect because commercial property coverage protects the business's physical assets, not liability for third-party claims. Relevant Pennsylvania laws also require businesses to carry liability insurance to cover such risks, ensuring compliance with state regulations. Question 3. Underwriting and claims. An underwriter in Pennsylvania is assessing an application for auto insurance. The applicant has a history of traffic violations but no recent accidents, according to Pennsylvania underwriting guidelines. How should the underwriter classify this risk? A. Preferred risk because the applicant has no recent accidents. B. Standard risk because the traffic violations are minor and do not pose a significant underwriting concern. C. Substandard risk because the traffic violations indicate a higher likelihood of future claims. D. Declined risk because traffic violations automatically disqualify the applicant. Answer C. Explanation. In Pennsylvania, underwriting guidelines classify applicants based on their likelihood of filing claims. Applicants with a history of traffic violations are typically considered substandard risks because they are more likely to be involved in future accidents even if they have no recent claims. Option is incorrect because a preferred risk classification is reserved for applicants with clean driving records. Option B is incorrect because minor traffic violations may still influence the risk classification and it is not automatically considered standard risk. Option D is incorrect because traffic violations alone do not necessarily lead to an outright rejection unless the violations are severe or numerous. Pennsylvania's auto insurance underwriting rules require insurers to classify risks appropriately to prevent adverse selection and ensure that premium rates reflect the applicant's risk level accurately. Question 4. Pennsylvania insurance laws. In Pennsylvania, how long must insurers retain policy records to comply with state record-keeping regulations? A. 2 years after the policy's termination date. B. 3 years after the policy's termination date. C. 5 years after the policy's termination date. D. 7 years after the policy's termination date. Answer C. Explanation. According to Pennsylvania Department of Insurance regulations, insurers must retain policy records for 5 years after the policy's termination date. This requirement ensures that records are available for regulatory reviews and consumer protection. Option is incorrect because 2 years is insufficient under Pennsylvania law. Option B is incorrect because the state requires longer retention period. Option D is incorrect because 7 years is beyond the state's requirements. Question 5. Commercial general liability insurance. A Pennsylvania business owner has a deal policy. During a product launch, an advertisement made by the company unintentionally defames a competitor. Which part of the CGL policy will provide coverage for the lawsuit filed by the competitor? A. Coverage A. Bodily injury and property damage. B. Coverage B. Personal and advertising injury liability. C. Coverage C. Medical payments. D. Commercial property insurance. Answer B. Explanation. Coverage B under a commercial general liability CGL policy provides protection for personal and advertising injury liability, including claims of defamation, libel, or slander. Option is incorrect because coverage applies to bodily injury and property damage, not defamation. Option C is incorrect because coverage C deals with medical payments for minor injuries. Option D is incorrect because commercial property insurance covers physical assets, not liability claims. Question 6. Property insurance scenario-based. Robert owns a home in Pennsylvania and has a homeowner's HOTH policy. A windstorm causes severe damage to the roof, resulting in rainwater entering the home and damaging personal belongings. The policy's deductible is $1,000 and the total loss is $12,000. What amount will the insurer pay for this claim? A. $11,000. B. $12,000. C. $1,000. D. $10,000. Answer A. Explanation. Under a homeowner's HOTH policy, windstorm damage is a covered peril. The insurer will pay the total loss minus the deductible. The total loss is $12,000 and the deductible is $1,000. Therefore, the insurer will pay $11,000. Option B is incorrect because the deductible must be subtracted from the claim amount. Option C is incorrect because the deductible is the policyholder's responsibility, not the insurer's payment. Option D is incorrect because the deductible is not $2,000. Question 7. Pennsylvania auto insurance laws. Which of the following coverages is mandatory under Pennsylvania's no-fault auto insurance law? A. Uninsured motorist coverage. B. Collision coverage. C. First-party medical benefits. D. Comprehensive coverage. Answer C. Explanation. Under Pennsylvania's no-fault auto insurance law, first-party medical benefits are mandatory coverage. It covers medical expenses regardless of who is at fault in an accident. Option is incorrect because uninsured motorist coverage is optional, though recommended. Option B is incorrect because collision coverage is optional. Option D is incorrect because comprehensive coverage is also optional. Question 8. Workers' compensation insurance. In Pennsylvania, which of the following is true about workers' compensation? A. It is optional for businesses with fewer than 10 employees. B. It covers only workplace injuries caused by the employer's negligence. C. It provides coverage for lost wages and medical expenses. D. It covers independent contractors. Answer C. Explanation. Pennsylvania's workers' compensation system provides coverage for lost wages and medical expenses for employees injured on the job, regardless of fault. Option is incorrect because workers' compensation is mandatory for all employers, regardless of size. Option B is incorrect because the system operates on no-fault basis. Option D is incorrect because independent contractors are generally not covered unless they meet specific legal criteria. Question 9. Ethics and professional conduct. Which of the following actions would violate a producer's fiduciary responsibilities in Pennsylvania? A. Depositing premium funds into separate trust account. B. Mixing personal funds with client premium funds. C. Providing clients with policy information. D. Offering advice on appropriate coverage. Answer B. Explanation. Producers in Pennsylvania have fiduciary responsibilities to handle client funds separately. Mixing personal funds with premium funds is considered commingling, which is prohibited. Option is correct behavior under fiduciary duties. Option C and Option D are standard practices in serving clients and do not violate fiduciary responsibilities. Question 10. Insurance contracts. Which of the following is not an essential element of an insurance contract? A. Offer. B. Acceptance. C. Consideration. D. Beneficiary designation. Answer D. Explanation. An insurance contract must have the following essential elements: offer, proposal to enter into contract, acceptance, agreement to the terms of the offer, consideration, something of value exchanged. G. Premium payments. Beneficiary designation is important in life insurance policies, but it is not an essential element of contract. Question 11. Policy provisions. Which policy provision allows an insurer to cancel a policy due to non-payment of premium? Their insuring agreement. B. Conditions. C. Exclusions. D. Declarations. Answer B. Explanation. The conditions section of a policy outlines the rights and duties of both the insurer and insured, including provisions for policy cancellation. Option is incorrect because the insuring agreement defines coverage. Option C is incorrect because exclusions list events not covered. Option D is incorrect because the declarations contain summary information such as the policyholder's name and premium amount. Question 12. Insurance fraud reporting. Under Pennsylvania law, insurance producers are required to report suspected fraud to which of the following entities? A. The Pennsylvania Department of Labor and Industry. B. The Pennsylvania Attorney General's Office. C. The National Insurance Crime Bureau (NIC). D. The Pennsylvania Insurance Fraud Prevention Authority (IFPA). Answer D. Explanation. In Pennsylvania, insurance producers and insurers must report suspected insurance fraud to the Pennsylvania Insurance Fraud Prevention Authority (IFPA). The IFPA is responsible for investigating and prosecuting insurance fraud cases. Question 13. License suspension and revocation. Which of the following actions could result in the revocation of an insurance producer's license in Pennsylvania? A. Completing continuing education requirements late. B. Sharing commissions with another licensed producer. C. Failing to report misdemeanor conviction within 30 days. D. Selling life insurance to family member. Answer C. Explanation. Pennsylvania law requires producers to report any criminal convictions other than minor traffic violations to the Pennsylvania Insurance Department within 30 days. Failure to do so may result in license suspension or revocation. Question 14. Replacement policies. When replacing a life insurance policy in Pennsylvania, the producer must provide the policyholder with which of the following? A. A prospectus of the new policy. B. A refund of premiums on the old policy. C. A notice regarding replacement. D. A policy comparison form signed by the insurer. Answer C. Explanation. Pennsylvania requires producers to provide a notice regarding replacement when replacing life insurance policies. This document informs the policyholder of the potential implications of replacing an existing policy, such as surrender charges or loss of benefits. Question 15. Pennsylvania auto insurance. Financial responsibility. What is the minimum liability coverage required for bodily injury per person in Pennsylvania? A. $10,000. B. $15,000. C. $20,000. D. $25,000. Answer B. Explanation. Pennsylvania law mandates a minimum liability coverage of $15,000 for bodily injury per person, $30,000 per accident, and $5,000 for property damage. Question 16. Surplus lines insurance. In Pennsylvania, surplus lines insurance can be obtained only if A. The insurer is based in Pennsylvania. B. The coverage is offered at a lower premium. C. The insurance is unavailable through authorized insurers. D. The policyholder provides a notarized waiver. Answer C. Explanation. Surplus lines insurance is used when coverage is unavailable through authorized insurers. It allows producers to access insurers that are not licensed in Pennsylvania but are eligible to provide coverage. Question 17. Unfair claims settlement practices. Which of the following is considered an unfair claims settlement practice in Pennsylvania? A. Denying a claim based on a policy exclusion. B. Offering a settlement that is less than the policyholder's demand. C. Failing to acknowledge receipt of a claim within a reasonable time. D. Requiring documentation to verify the claim. Answer C. Explanation. Failing to acknowledge receipt of a claim within a reasonable time is an unfair claims settlement practice. Insurers must respond promptly to policyholders to avoid penalties. Question 18. Homeowners insurance. Pennsylvania Fair Plan. The Pennsylvania Fair Plan provides insurance for which of the following? A. High-value homes. B. Properties with high risk of flooding. C. Properties that cannot obtain coverage in the standard market. D. Commercial properties only. Answer C. Explanation. The Pennsylvania Fair Access to Insurance Requirements Plan is designed to provide insurance to property owners who cannot obtain coverage in the standard market due to factors such as location or property condition. Question 19. Temporary license. In Pennsylvania, a temporary insurance license may be issued to which of the following individuals? A newly hired producer awaiting exam results. B. A licensed producer from another state. C. The spouse of a deceased licensed producer. D. A person who has filed for bankruptcy. Answer C. Explanation. A temporary license may be issued to the spouse or representative of a deceased or disabled producer to allow time to manage the business or settle affairs. Question 20. Pennsylvania life insurance laws. In Pennsylvania, life insurance policies must include a free look period of at least how many days? A. 10 days. B. 15 days. C. 20 days. D. 30 days. Answer A. Explanation. Pennsylvania law requires a free look period of at least 10 days for life insurance policies. During this period, policyholders can review the policy and cancel for a full refund if they are not satisfied. Question 21. Annuities. Suitability standards. When recommending an annuity to client in Pennsylvania, producer must ensure that the product is suitable based on A. The client's gender and marital status. B. The client's current income and net assets. C. The client's future earning potential. D. The client's educational background. Answer B. Explanation. Producers must conduct a suitability analysis to ensure that the annuity is appropriate for the client's current income, assets, financial situation, and objectives. Question 22. Pennsylvania auto insurance. First-party benefits. Under Pennsylvania law, which of the following first-party benefits is mandatory for all auto insurance policies? A. Funeral benefit. B. Extraordinary medical benefits. C. Medical benefit. D. Income loss benefit. Answer C. Explanation. In Pennsylvania, the medical benefit is a mandatory first-party benefit under auto insurance policies. The minimum required coverage is $5,000. Other first-party benefits such as income loss, funeral, and extraordinary medical benefits are optional coverages that policyholders can choose to add. Question 23. Insurance contracts. Element of contract. Which of the following would invalidate an insurance contract under Pennsylvania law? A. The insured is minor. B. The premium payment was made late. C. The contract lacks legal purpose. D. The insured changes their address without notifying the insurer. Answer C. Explanation. For an insurance contract to be valid, it must have legal purpose. If the contract involves illegal activities, e.g. insuring a property used for illegal operations, it is considered void. Being a minor does not invalidate a contract as long as there is insurable interest. Question 24. Scenario-based. John Carmichael owns a commercial building in Pennsylvania. He discovers that one of his tenants has been engaging in illegal activities on the premises without his knowledge. The tenant's lease includes clause stating that any illegal activities will result in immediate eviction. However, before John can act, the building suffers significant damage from fire caused by the tenant's negligence. Under John's commercial property insurance policy, how would the insurer likely respond to his claim? A. The insurer would deny the claim due to the illegal activities. B. The insurer would pay the claim but cancel the policy afterward. C. The insurer would pay the claim as long as John had no knowledge of the illegal activities. D. The insurer would deny the claim and pursue legal action against John. Answer C. Explanation. Under Pennsylvania insurance law, insurers must honor claims if the policyholder had no knowledge of illegal activities on the insured property. Since John was unaware of his tenant's actions, his lack of knowledge protects him under the innocent insured provision. The insurer may choose to non-renew or cancel the policy afterward, but must pay for covered damages. Question 25. Unfair trade practices. Which of the following would be considered twisting under Pennsylvania insurance laws? A. Offering a discount on premiums to a long-term customer. B. Encouraging a policyholder to replace their existing policy without a valid reason. C. Recommending a higher premium policy to increase commissions. D. Misstating the benefits of a competing insurer's policy. Answer B. Explanation. Twisting involves inducing a policyholder to replace an existing policy with another one without a legitimate benefit to the policyholder. This is considered an unfair trade practice in Pennsylvania and is prohibited by law. Question 26. Workers' compensation insurance. Employer obligations. In Pennsylvania, which employers are required to carry workers' compensation insurance? A. Only employers with more than 10 employees. B. Only employers in high-risk industries. C. All employers, regardless of the number of employees. D. Only employers with full-time employees. Answer. C. Explanation. Pennsylvania law requires all employers to carry workers' compensation insurance, regardless of the number of employees or industry. Exceptions apply only to sole proprietors, domestic workers, and certain agricultural workers. Question 27. Flood insurance. NFIP waiting period. When purchasing National Flood Insurance Program NFIP policy, what is the standard waiting period before coverage becomes effective? A. 7 days. B. 14 days. C. 30 days. D. 60 days. Answer. C. Explanation. The NFIP has the 30-day waiting period from the date of purchase before the flood insurance policy becomes effective. This waiting period helps prevent adverse selection, where people only buy insurance when a flood is imminent. Question 20. Commercial general liability CGL average. Which of the following is covered under coverage? A. Bodily injury and property damage liability in a commercial general liability CGL policy. A. Damage to the insured's own property. B. Bodily injury to an employee during work hours. C. Damage caused by product manufactured by the insured. D. Personal injury resulting from defamation. Answer. C. Explanation. Coverage in a deal or policy covers bodily injury and property damage caused by the insured's products, operations, or premises. It does not cover damage to the insured's own property or employee injuries, which are covered under workers' compensation insurance. Question 29. Policy provisions. Cancellation and non-renewal. Under Pennsylvania law, how many days' notice must an insurer give for non-renewal of personal auto insurance policy? A. 15 days. B. 30 days. C. 45 days. D. 60 days. Answer. D. Explanation. Pennsylvania law requires insurers to provide 60 days notice for non-renewal of personal auto insurance policy. This is intended to give policyholders enough time to secure alternative coverage. Question 30. Fiduciary responsibilities of producers. Which of the following actions would be considered? A breach of fiduciary responsibility by an insurance producer in Pennsylvania. A. Commingling client funds with personal funds. B. Charging a commission on a policy sale. C. Providing clients with policy recommendations. D. Reporting premiums collected to the insurer. Answer. A. Explanation. Commingling client funds with personal funds is a breach of fiduciary responsibility. Producers must maintain separate accounts for client funds and ensure that they are properly handled and reported to the insurer.